Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar morning call. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me Nigel D'Souza and Mangalam Malu. And while, of course, the boys are pumped up because it's Friday and we're finally getting to the end of the week, it's the girls on top, guys. What a game. I don't know.
Girls on top. You know, I was looking...
I got just the last bit of it, the last few overs.
I was looking at all the numbers yesterday that came in from all the consumer spaces, etc., all the results, but the most important number for me was 341. We got that, and we got that in so much style. A big shout out to, you know, all the performers and all the supporters, and Jemima, what a player, Jemima Rodriguez. I mean, when the time came, she went ahead and made, you know, the innings of a lifetime.
Well, goosebumps even now as you'll talk, right? What an innings. You know, I saw a majority of that game and champion stuff, you know, didn't let the head go down, had our chances, took advantage of it. And that post-match speech as well. Humility, telling you about pain that you have gone through and then coming out on top, you know, because the road is never easy. But when it's tougher, the success that you enjoy at the end of it is even better. And kudos to this young girl and kudos to the team. We have our hands full, Mangalam. I'm sure you remember November 2023 when the boys didn't make it past the final. I think the girls are going to go ahead and avenge that loss. And in fact, November, we bring home the cup again.
We bring home the cup again on November. There won't be any heartbreak this time around because the team that caused the heartbreak has been taken out yesterday. But more importantly, the team that caused us a lot of victory and a lot of joy, India versus South Africa. That happened a few months after that in the T20, and we're meeting South Africa again in DY Patil. So, Navi Mumbai, November, let's get it.
But guys, beyond the stats that you all are talking about, I mean, just sheer, I'm no feminist, I don't claim to be one, but just the sheer power, 50 overs of a game, endurance, beating the top team of the world. It's a huge moment for women in sport and definitely a huge moment for women in cricket. So absolutely, 3 cheers.
So we've got our hands full over the weekend, but I think we've got a market to look at. And I wasn't there yesterday. Don't worry, guys. I mean, I'm back today. I think the market said, let's wait for those fresh all-time highs that, you know, young bullish man is not there. But Surabhi, let's go straight to the action. Okay,
so let's straight away get to it. Starting first with the global cues. So what happened? Overnight, Wall Street had a bit of a quiet session. In fact, there was a fair amount of profit-taking. If you're looking at the NASDAQ, was down about 1.5%. S&P fell about 1%. And the Dow was slightly lower. Now, the reason behind all this is earnings and a slight disappointment that obviously has come in from some of the Magnificent Seven. Yesterday, Meta's shares were down 11%. That's the biggest loss in the last 3 years. And why? Because Meta is just spending so much on, you know, AI capabilities. They've increased their capex, to hold your breath, $70 to $72 billion for the year. I mean, that's just a sheer raw power of money that they're putting behind technology. And in the near term, obviously, that's a concern for shareholders. And it revived that debate around whether we are in an AI bubble or not all over again. So that was one part of it. But if I talk about some of the other earnings, they were more heartening. Amazon, for instance, was up 13%. The market was delighted with the way their cloud revenues are shaping up. There was 20% rise in the cloud computing revenue. So that worked very well for the stock. Apple's numbers were pretty decent. Apple was up 3%, continuing to chug along with those iPhone sales. So it was all about tech earnings last night. Netflix is doing, I think it's a bonus that they're doing, and a split as well. So that stock was up about 3%. Now coming to, you know, tariffs and what the final contours of the US-China deal are like. So we know that US has agreed to cut the fentanyl tariffs by 10%, and that's straight away, effective immediately, which takes the overall effective tariff on all Chinese goods coming into the US to 47%. So that crisis has been averted. And in lieu, China has agreed to hold back on the export controls of the rare earths by 1 year. So those are the details of the deal that was announced yesterday. Not too much action in the money markets, but yes, on the yield side of things, the 10-year continues to inch higher. It's at 4.1% because of this uncertainty around the December rate cut, whether it's coming or not coming. And that uncertainty, of course, was unleashed by the Fed chief at the end of the policy setting meeting earlier this week. The dollar, by the way, has quietly inched to near 3-month highs, highest level since August, and it's at 99.5 now, the dollar index. So keep that in mind as well. But while we look at all of these global cues, I think the bigger driving force for our market is going to be, again, stock-specific action and earnings. We've spent the week in largely a range. Those all-time highs have been elusive, but it's not like the market's quiet. There's tremendous stock-specific action. And today, amongst all the, the flurry of earnings, I'll watch out for 3 names very carefully. One is, of course, ITC. It's a large heavyweight. And we'll see if the market is happy with the performance of the cigarettes business, which looks good, actually, 6% growth over there. Bandhan Bank is a big disappointment in terms of P&L. We'll tell you why as we go along. And there is, of course, Swiggy. Forget the earnings. Swiggy is raising a lot of money again. 10,000 crores is what they've got on their mind. So that's something that we'll discuss and debate as we go forward. And finally, speaking of consumer and consumer tech, today is the big day. Lenskart, the debate around valuations continues to rage on social media, in real life and everywhere. In the meantime, they've managed to raise a pretty decent amount of money from anchor investors. So it's all very well managed. It is probably the most high-profile IPO we've had in the last many months. So that's another big talking point today, and we'll get to it in just a bit. But Nigel, first, the technical and F&O cues that you're looking at.
Well, the FIs, they seem to have taken their leg off the pedal. The last series itself, they were not big sellers, but last couple of trading sessions, again, they've turned into sellers. So we'll have to see whether or not this trend is likely to continue, or it's just, a flash in the pan with regard to the selling, and they return back to their neutral or their positive stance. That's the hope, because it's clearly weighing on the markets. Yesterday as well, there was a net sell figure if you look at the DI and the FIs put it together. What about in the future space? Well, we were saying, right, that we would like some shorts in the system. They've granted that wish. We've got 10,000 short contracts that have got added. Short positioning added around 83% approximately. So some shorts in the system. I like it. The markets actually, at the start of the series, we made this point, that shorts are relatively lower at the start of the November series in comparison to October series. But we could miss it. So good to see some shorts getting into the system. And you just pull up, the client positioning. They have added some long positions since the start of the series. And the FIs, they've added some short positionings. This is the ideal combination. No worries if it goes in this direction as well, with the clients adding longs and the FIs adding shorts. Moving to the PCI, that had gone dancing away to the upper end of the range. Now it's come back down to the lower end of the range. So that as well is positive, 0.75 on. Why did it come down? The call writers, they feel that they're in the game. If you look at the 26,000 call, 25,900 call, big open risk built up on both those two strikes, but there was some action on the lower level put as well. I think the markets are in a bit of a range in the near term till we get past the upper end of the range. So the recent high from 26,100, that's going to be the first level of resistance, while the 26,300, that appears to be the major resistance. If we can get past that, we're in for a bazooka move on the upside. So that's going to be important. However, this market, the trend is up. Still the trend is up, I would say. 20 DMA is important, that 25,400, 25,500 odd mark. Till that holds out, you'll have to say that this trend that we started still appears to be intact, and the bulls have some unfinished business at higher levels. And the Nifty Bank will have to play its role, right? It's normally a good month. We have seen that the Nifty Bank has been moving with good amount of strength, and there's a hope that credit growth will actually pick up. So this 57,500 odd mark, look at the options data, look at the recent low as well. That becomes the first level of support that you're looking at. Well, in terms of stocks that we're looking at, Saman Capital, that comes out of the F&O ban. So that normally calls, for a stock to be in focus. So last couple of trading sessions, a little bit subdued, but I think the trend is up. And I think till that 25,500 odd level holds out, I think you'll have to bet on that unfinished business at higher levels.
All right, Nigel, take that point. The trend is up and there is unfinished business at high levels, though we'll have to wait some triggers coming in for us to actually go past those higher levels as well. So could those triggers be global or local? Neeraj Seth, the founder and CIO at 3R Investment Management, joins us now. We've been doing well domestically, Neeraj, but the uncertainty of the globe keeps us on tenterhooks and perhaps just a little away from all-time highs. What is your sense on, what the environment is right now in the globe with the kind of money that is being deployed towards AI? No, play in India, so to say, about this, and the tariff uncertainty that continues.
So I think we are moving towards maybe a slightly lower uncertainty. And there are 3 parts of it, if you think about it. You have the trade uncertainty, all the tariff discussions. So last 1 week, President Trump's Asia trip, I think on the margin was on the positive side. Not everything is resolved, not even close, but the direction of travel certainly actually showed some de-escalation. From a global growth perspective, there's certainly you're seeing slowdown, but you're not seeing a sharp slowdown. So I think there's certainly a support factor there. And lastly, from a US policy standpoint, obviously the markets were a little bit disappointed with the comments from Chair Powell. But the fact is, this is what one would have expected, a rate cut with some uncertainty about the December cut, which is going to be data dependent. And you're not getting a lot of data right now out of US, but all together, I think we are still in an okay environment from a global perspective, which is, to your point, could be supportive for India. And the last point is the India trade deal. I think it's, if I look at the cues from the last 1 week, there should be some traction there in the coming days and week.
So just a matter before we hit all-time highs in India.
Well, there's a potential now, as you were showing the data, the FIIs have been on the margin selling, slowed down selling again. And there's an additional element there, which is the competition for capital. When you think about Asia Pac, you have obviously the Chinese market doing well. Japan is actually getting traction. The KOSPI in Korea has done exceptionally well this year. So there's a little more balance, but on the margin, the FIIs selling should continue to slow down, remain muted with some potential for inflows if we see the further reversal in the market on the upside.
Well, hi Neeraj, morning, good to see you in. And you mentioned this closure on 20 sessions or so ago, and that's the way it played out, right? The FIs have been sellers. This is a case where they could actually turn neutral. That's what played out. But as you said the last time around as well, earnings growth, that needs to come back. Then we could see the gush of inflows. But going by what you're saying, Neeraj, I think you're talking about that Trump is likely to have peaked out. We are likely to have seen peak Trump tariffs. Is that correct?
I do believe so. The direction clearly is softening.
All right. And what about the Fed? What do you make of the Fed action, yesterday with regard to that cut? And what's the trajectory they'll follow going ahead? And if you could also come in on gold, I think you were quite positive that gold could continue to trend up. What's your view out there? Fed action and gold. Please go ahead.
Sure. And by the way, these two are somewhat related.
Yeah.
So first of all, the Fed action, it was very much in line with what I would have expected, a 25 basis points cut with data dependency for future trajectory. I still think the Fed has room to cut another 50 to 75 basis points before they pause. So December is still very much in play. But in absence of data, the point about data dependency will stay true. I don't think that's changing. So on the margin, still in the camp that you will see further cuts from the Fed. And with regards to gold, interestingly, last time when we were chatting 20 days back, gold had crossed 4,000. We again crossed 4,000. So we did a little bit of a round trip with a technical correction. Structurally, from a medium-term perspective, I remain positive on gold. As I said, it is taking the place of an alternative currency for central banks and savers. I think there is a good story unless we see significant shift from a global monetary policy perspective. So if the Fed doesn't cut rates and the dollar keeps strengthening, then the dollar gold, obviously that cross can see gold coming lower.
Neeraj, hi. What about IPOs in India? It's a red hot market. There's never a dull moment and there's always a fierce debate. Today's a big day as well. Lenskart is one of the best known consumer brands when it comes to eyewear. I don't know if you're participating in this one, anything else. What have you been doing, if anything at all, with the IPOs here?
We're less involved on the IPO side, but just in terms of broad market backdrop, I think India is actually going through the phase of a lot of the financialization of the system. And in fact, probably the only country I can see where the IPOs are going through is a reflection of the investor confidence in the market. So you certainly are seeing that uptick. And this also is another factor when you think about it in terms of the new equity issuance and the IPOs, which will keep bringing the FIIs back in focus as the markets turn.
Okay. All right. We will see how it goes. But for now, at least, the deals market on the primary side and even secondary market deals has been an absolute frenzy in an otherwise range-bound year. Thank you so much for joining in. Good to have that perspective from you. Have a great weekend, and we look forward to chatting again soon. Well, with that, let's quickly tell you what all we're covering on the show today. Plenty of interactions coming up at 8:35. Param Desai of Prabhudas Leadhar is going to join in. We'll talk about some of the top trends in the pharma sector. Remember, there was big news yesterday. Dr. Reddy is hitting a roadblock with respect to the semaglutide launch in Canada. And there's a management transition at Cipla, so lots to discuss with him. At 9 a.m., we'll have Avnish Roy of Nuvama joining in to talk about some of the key FMCG numbers that have come out. Dabur and ITC both reported yesterday. We'll ask him how he is reading through the consumer trends. Pradeep Bhattacharya joins in at 9:20. He's from Edelweiss and he's our market master of the day. At 9:30, we are in conversation with the management of Indegene, talk about their Q2 numbers. After that, the management of Canara Bank joins in. Very good performance by Canara Bank in the second quarter. So we'll find out how the second half is looking. Mr. Raju will join in at 9:40. And at 9:50, we'll be in conversation with the top team at Swiggy. Numbers look pretty steady for the second quarter, but more interestingly, they're out in the market to raise 10,000 crore rupees. So what's behind that? Rahul Bothra will join in with some perspective. Towards the end of the show, Lata will be in conversation with Pratim Sengupta of Bandhan Bank to talk about the bank's Q2 performance, which has been a little sluggish to say the least.
Time to slip in a short break. Got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. We're looking at ITC, NTPC, Swiggy, United Spirits, Pidilite, DLF, Naveen Fluorine and Emphasis. Long list of stocks reacting to positive news flow. On the flip side, Manappuram Finance as well as Bandhan Bank could be opening up in the red. Slip into that break, come back, we get into further detail on all of these names. Don't go anywhere.
Welcome back. You're watching us here on Bazaar Morning Call. Let's get it stock specific. Our entire team is standing by with the list of CNBC TV18's top stocks for the day. I'll start with ITC. Reported its numbers last evening and it's a decent set that has come in from ITC. The cigarette volume growth coming in at 6%. The street was expecting 5 to 6%. So that's a positive. FMCG revenue growth, that was a surprise because it grew at around 7%. The street was expecting just 3 to 4%. And if you take, the notebook business out, which has been facing structural issues, the FMCG revenue growth is actually 8%, which is much higher than all the other peers that have reported their numbers. What is not good? The agri business, that has seen a revenue decline of 31%, was impacted by a seasonality and a high base. And more importantly, the company said value-added exports were impacted by geopolitical uncertainty and US tariffs. That does not account for much in the ITC SOTP. What's good is the cigarette business and the FMCG business, and that's exactly what will take the stock higher. On a reported number basis, 18,000 crore revenue, the street was working with 19,000 crore. That miss is largely on account of the agri business revenue miss. But EBITDA, 6,250 crores, largely in line. Net profit at around 5,200 crores, much above street expectations, going with green for ITC. But from ITC, let's go on to NTPC. Vivek, what do you have?
The NTPC, this particular quarter Q2 on account of rains was expected to be a muted quarter for all utilities. In line with that, it's a subdued quarter as far as NTPC is concerned. But the conference call takeaways indicate that commissioning plans are on track. Valuations are cheap, and also when you're looking at the tariffs on a year-on-year basis, they're actually improved. Along with that, cheap valuations is something that should support NTPC stock in the session today. So revenues, looking at came in at close to 39,166 crore versus our poll of slightly over 39,050 crore. EBITDA coming in above the 10,000 crore mark, and margins quite strong at 25.6%. Profitability exactly in line with our poll, 4,650 crores. Now, talking about the generation as far as H1 was concerned, that fell 6.5% on account of subdued demand. PLF stood at 66.1 versus 70.6, again indicating that demand has ensured that actually there has been subdued demand across most of the categories. Average tariffs has actually gone up and has come in at 4.9 kilowatt hour. Now, talking about the key takeaway, capacity addition targets for FY26 has been maintained at 9 gigawatt. That is a key positive takeaway, number one for NTPC and also for other suppliers like BHEL, indicating that the Lara Ultra Mega Thermal Power Plant is on track.
Okay, all right. Thanks a lot for that, Vivek. Mangalam, coming back to you. Swigging it away. How were the results?
Well, the most important number from Swiggy was not the reported number. It was the QIP that they are planning. A 10,000 crore QIP is, what the management is planning. The board meets on November 7th for that. So that's the important part. Apart from that, if you look at the numbers, 54% growth in the reported revenues, EBITDA loss widened. And that was, as per script, because the companies are investing in quick commerce. The other things that if you look at, the one thing that stood out for me for the last couple of quarters, in food delivery, they've been doing better than Eternal or Zomato, largely telling you that they're gaining market share in the food delivery business. However, quick commerce, they are on their path. Blinkit is much ahead as compared to Instamart, but 107% growth versus 152% growth. They're adding dark stores as well. The internals of the quick commerce business, average order value grew by 40%. And contribution losses declined by 30%. So that's a margin of close to minus 2.8%. But importantly, versus last year to now, non-grocery is at 26% versus just about 8%. So obviously that's margin accretive and that would be a positive. And the final thing they'll be looking at, their cash on books right now is 4,600 crore rupees. They've announced a stake sale in Rapido, for which they will get 2,400 crore rupees. So that would be about 7,000 crore rupees. And now with the QIP that comes in, their cash balance will be around 17,000 crore rupees. How does that compare with Eternal? 18,000 crore rupees. So it brings their war chest at par with Eternal and in fact a little more than Zepto as well. So all these factors would keep them in the stead for competition ahead, and that's something we'll be watching out for.
I mean, that fundraising was really something that caught my eye as well, and we'll quiz the management about it because they've come to the market, now they're already looking at more equity raising, but is it just a sign of things in the quick commerce arena? Rahul Bothra will join in at 9:50, promises to be an interesting conversation, so do stay with us for that. For the time being, let's head to the financials and figure out how the numbers look like. Gaurav is going through a slew of earnings. Manappuram Finance as well as Bandhan Bank. Give us the highlights, Gaurav.
Yes, both the companies actually reported weak show when it comes to second quarter. First, let's talk about Bandhan Bank. When we look at the numbers, net interest income declined almost by 12%, PPOP that declined almost by 30%, and when it comes to profit, that declined almost by 88% on a year-on-year basis. And I'll tell you why. When we look at net interest margins, now they have contracted almost by 60 basis points sequentially. Now this was something which was not factored in by any member on the street, and the reason being that there is change in asset mix and at the same time some impact from the repo rate cut. Second is that when we look at asset quality, we did not see any kind of easing of asset quality. In fact, the credit cost that remains stable, slippages remain stable. In fact, when we look at the EEB portfolio, which is a microfinance portfolio, we saw some stress in the SMA 0 book as well, and this was because they said that the number of days were lower because of the holidays that they had in the fag end of second quarter. Apart from that, when we look at brokerages, they have also reduced their target price. We have got in the likes of Investec, CLSA, Nuama, all have written bearish note on the company. When we look at Manappuram now, here also we did not see any great set of numbers. In fact, the AUM that remained flat on a year-on-year basis. When we look at the gold portfolio, that actually did well. That increased almost by 30%, but Ashirvad, that has declined almost by 50% on a year-on-year basis. Apart from that, when we look at the numbers, net interest income that declined almost by 18%, PPOP declined almost by 35%, and PAT that declined almost by 62%. All of the numbers were a bit below street's expectation. When we look at yields now, that was also another surprise that came in. Yields have come down to 19.7%, and at the same time, management also said that it will remain somewhere in the range of 18.5. So definitely weak set of numbers, not great set of commentary as well. And on back of that, we will be watching out on both these companies today.
All right, we will be watching out for both these companies today. In fact, the management of Bandhan Bank will be joining us today at 10:15 a.m. to talk about their second quarter numbers as well. Thanks a lot for putting those numbers up for us, Gaurav. Let's talk about the other two sets of numbers that have come in. United Spirits and Pidilite, both of them solid. In fact, United Spirits a lot more. And this was one of those stocks that we had pointed out as one of the stocks to track also because the last couple of trading sessions it has been doing well. We've seen good numbers coming in from the likes of Radico, etc. And United Spirits, people weren't expecting as much, largely because of their Maharashtra exposure. But the Andhra tailwinds, they continue to boost performance. And a favourable base has actually offset the Maharashtra policy changes. And more importantly, better product mix and benign raw material environment has boosted their margin. So let's put those numbers into perspective. The street was working with a number of 3,080 crores on the top line. The company has reported 3,170. 552 crore EBITDA, the company has reported 672 crores. And the net profit has been a massive 100 crore beat versus expectations. So 472 crores versus 387 crores. If you look at these numbers on a year-on-year perspective, and that's when you get the story, 11.5% revenue growth, 32% EBITDA growth, and 41% profit growth. P&A volumes up 8%, expected 6 to 7%. Popular volumes up 6%, expected 6 to 7%. I'm sure a lot of you guys contributed to that because, you know, the management has been saying we don't want people to drink more, we just want them to drink better, and that's good for their margins as well. But Pidilite, again, Fevicol ka jod, you know, it's consistent, solid performance. 3,500 crore revenue, EBITDA 850 crore, bang in line with expectations. Net profit 585 crore, again in line with expectations. But year on year, it's a 10% growth across all parameters. Consumer business volumes grew 10.3%. B2B volume grew 9.9%. And the company is saying it was partly impacted by lower exports. But 9.9% versus expectations of 9 to 11%, no problems whatsoever. And they expect the operating environment to improve out here as well. So solid performance coming in from Pidilite, consistent and very good from United
When
Spirits.
you get 9 to 10% growth from a consumer company, you take it. You don't
take
ask
it.
questions, you just take it.
And the big takeaway actually from what Mangalam said is, looks like people are drinking a lot of whiskey because United Breweries was...
United Breweries wasn't very good.
Was very good.
And because it's the weather, right? Nigel would know this a lot better. For me, it's the pakoras that I eat when it rains. But
Extended monsoon benefiting United Spirits.
You drink whiskey and you don't have as much beer. So I guess summers is when beers are more sold.
Let's go to the next.
Let's go on.
Let's go to the next set of numbers then. Thanks a lot, Bagla, for that. Sonal joins us to tell us about Naveen Fluorine and DLF. Sonal, morning.
Good morning, Nigel. Well, strong set of numbers coming in from Naveen Fluorine. It was a top-down beat. Revenues up 46%. EBITDA almost doubled on a YOY basis. We had margins coming at 32.4% versus 21%. Profits also higher at 148 crore rupees. All the segments did really well. Their HPP segment 38% higher, specialty chemicals 35% higher, CDMO business saw a growth of 98%, and in the conference call, management mentioned that they are upping their guidance for FY27 in terms of EBITDA margins to 28 to 30%, and there is an upward bias risk to it as well. So strong set there. DLF also good bookings this time. They have already achieved 72% of their full booking target for the year at 22,000 crore rupees. So in the first half they have already achieved 72% of it. Pre-sales are up 526% on a YOY basis. Of course, this is on a low base, but this was aided by the Mumbai project launch, which saw good response. Customer collections were also good, 13% on a YOY basis. The conference call is today though. We'll get more details, but going with green on these numbers.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Reema. She's here to tell us about Emphasis. Morning, Reema.
Hi, good morning. Steady set of numbers from Emphasis. The company reported a 2% revenue growth quarter on quarter. Year on year, it's about 6%. EBIT margins stable, unchanged at 15.3%. But the company commentary is positive. For starters, they're saying they expect 2x the industry growth. So doubling the industry growth because H1 has been strong and the deal wins have been very robust. Margin guidance remains unchanged at 14.75 to 15.75. The deal wins in the first half of the year are more than the deal wins that they had in the whole of last year. And plus the pipeline is at a record level. So the commentary is positive and Q2 has been a stable quarter for the company.
All right, Reema, thanks a lot for that. In case you missed it, here's a quick recap of all our top stocks. The ones with positive news, we have ITC, NTPC, Swiggy, United Spirits, Pidilite Industries, DLF, Naveen Fluorine, Emphasis. But the ones with negative news flow, we have Manappuram Finance and Bandhan Bank, all of them on the back of weak results. Let's get in Manisha Gupta now for a roundup of all the action coming in from the commodities and currency market. Manisha, good morning.
Thank you for that. Well, I'll start with the gold prices, where after 4 days of decline, we're looking at some buying coming back. So $4,000 an ounce is back on your screens. Remember, we did see 39.25 off a low in the markets yesterday itself. Well, this has to do with the World Gold Council report, which says that in the third quarter of this year, the global gold demand hit a record high on a quarterly basis, up by nearly 3%. Within this, it is the central bank buying, which has gained up by 28% on a quarter-on-quarter basis. Almost nearly 23 countries have continued to say that they would continue to buy gold, and Kazakhstan and Brazil is an addition to that. The jewelry sales, of course, including India, have been weaker in the previous quarter, but the investment demand absolutely rocking there. The other thing I want to keep a focus on is the base metal prices, where we have seen some profit taking. This is because of the strength in US dollar, with the Powell's statement saying that December may not be a rate cut. That's what's bothering the markets. But having said that, the kind of supply declines, mine disruptions, and the fact that you're also looking at US and China truce in sense of trade agreement there are some of those supportive factors. All in all, October is going to be a very strong month when it comes to base metals as a space.
Okay, all right. Got it, Manisha. Thank you very much for that. So those are some of the important commodity cues for the morning. We'll take a quick break. On the other side, we'll have Siddharth Khemka of Motilal Oswal Financial Services joining in. We'll talk about the flurry of earnings that we've seen overnight, plus some of the other interesting stocks for the day.
Welcome back. Hope you're having a good morning. As promised, we have Sid Khemka, Head of Research, Wealth Management at Motilal Oswal, who joins us on the show. Hi, Sid. Good morning. Good to see you, Ben. Let's talk about Swiggy. You all have been positive on this space. How do you read those numbers and preference between the two, Eternal as well as Swiggy?
Hi, good morning, Nigel. Glad to be on the show. I think if you look at the key internals of the numbers between Swiggy and Eternal, I think Swiggy came out with a good set of numbers, a better set of numbers. We are seeing that the cash burn has come down. The quick commerce numbers are seeing sharp improvement, both in terms of the average order value, the contribution margin that has seen us that is witnessing an improvement. And I think overall, they are now entering a phase of profitability. The management is guiding for the EBITDA break-even by the first quarter of FY27. So overall, what we see is that while the talks of competition is coming back, but it may not happen in the way we saw in the past. There is a calibrated expansion that they are doing. Plus, the capex that has been done in the recent past, the new dark stores, that will start contributing over the next few quarters. So overall, we believe that this is a company which is now entering the phase of profitability, supported by an operating discipline, improving network efficiency, and the combination of the steady food delivery growth, rising Instamart order values, and the easing fixed cost drag. That makes us positive on Swiggy. We have a target price of 550, giving an upside potential of 31% from current order levels.
Okay, 550 on Swiggy. Since we're talking about new age companies, these days most IPOs that list, and we were having a laugh on this yesterday as well, everything that lists is a tech company these days in India. I mean, you have a computer, I think you become a tech-enabled or tech-focused company. But jokes aside, Lenskart, Siddharth, big debate raging. Which side are you on? Subscribe or not?
Yes, good morning. I think that debate is continuing. So while we like the business model, the growth, and whether you can add that digital thing or not, but I think it's definitely a new age business and e-commerce business. The growth going forward is now largely, I think, is being driven by the offline store. So you may not call it as a pure digital company anymore. So as I said, the debate is on whether the valuations justify the future growth. But one thing is for sure, they built a good brand, they've got a good business model. Online and offline mix is pretty well. We saw that with the same with Nykaa, that a pure digital model, especially in the consumer business, may not do that well in a country like India. So you have to have an offline presence as well, where the consumer can come, touch and feel.
No, Siddharth, no one's debating or arguing against the business. I think, most of us have been probably customers as well at some point in time. No one's arguing with the experience of the business. The only argument is on whether, 200 plus times PE is justified. I think the so-called grey market is indicating that there'll be a 40-50 rupees pop on top of that 402 issue price. The question is, I mean, is it long-term wealth or not? Once all these anchor investors go, when the lock-ins end, what happens then? I mean, if someone were to ask you, I need a great long-term portfolio idea, 3 years plus, should I subscribe to Lenskart or not? What would you say?
So right now, Surbhi, I would avoid, as you rightly said, the valuation is still high. I think there is a lot of hype and a lot of investors have gotten, big names have gotten, and hence you could see that pop. But I think the next 2-3 years, the profitability, the growth, sustainability, that could determine. And we have seen some of the other companies, they've already listed and have gone through the grind. And now we have a clear path to profitability, clear path to growth. So a clear answer is no. Definitely, we'll have to wait for a few quarters of delivery and then we'll see whether we have a positive view. But at current juncture, I think there is too much of hype in terms of the valuation and growth that the company is offering.
We take that point entirely. At current juncture, we will obviously have to pay a little more to enter, if at all, given the valuations. But important part would be post-listing what their path to growth would be, and then the street would realign their estimates on that as well. But speaking about realigning estimates, something a lot of the pharma analysts would have done yesterday for some of the semaglutide expectations that they had as well. Param Desai, the analyst at Prabhudas Lilladher, joins in. Param, among the top losers yesterday, we had the name. What do you make of the kind of shift that we will see for semaglutide for Dr. Reddy's in Canada, and how much of that is factored in right now after the fall yesterday?
Good morning. So if you see semaglutide, big opportunity for a Dr. Reddy, and that is one of the key growth driver to replace the price erosion of the Revlimid. So in my view, it's a temporary glitch. They will be basically, they already have got the reviews in the past, so no additional studies are required for that. So in the best case scenario, in our view, I think they can launch the product in the next 5 to 6 months if all goes well. So far, not any generic has got an approval in the Canada. So that's a good sign. I think some of the generic guys have a TAD in Jan 2026. So if there is not much prolonged delay beyond March, then it won't have too much of impact, and Dr. Reddy also will be in the first mover kind of thing. But anything delayed beyond March 2026, I think yes, then it will hurt, and we will see the estimates going down.
Okay, so that's Dr. Reddy's. Param, just to complete the point, I mean, would you say this is just a transitory hiccup for Reddy's, or is it materially altering the course of the earnings scale-up that you were factoring in before this?
I believe it's a transitionary thing, because it's not that they require additional studies and all that stuff. It's some additional clarification has been asked by the agency. So the thing launch will happen. I think it's a question of whether it will take 3 to 6 months or it will take 9 to 12 months. That is the key thing to watch out for. If there are 2, 3 more generics before Dr. Reddy come into the market, then yes, then this will be a bit negative.
All right. Hi, good morning, Param, and good to see you, Ben. What do you make of Cipla as well, the results and the news flow? Mr. Vohra's moving on. Your take on it?
Yeah. So earnings were pretty much largely in line. Yes, Mr. Umang had been a key personnel in driving the Cipla's growth prospects over the last, say, several years. But I think, in my view, I think Cipla is a large institution, and Mr. Achin, who will be replacing, when he was in part of the Cipla for a reasonably good amount of time in handling the India part of the business, and is a global CEO. So I it's more of a sentimental, say, negative. I think from an earnings perspective, I do not see this transition impacting the say profitability or EPS.
All right, we take that point. Thank you so much for joining in. And just before we let you go, do you track Shelly Engineering as well? Or, I mean, would you have a view on some of the second-order impact because of the semaglutide pens that they make for Dr. Reddy's?
No, we do not cover Shelly Engineering.
So Param, leave us with some top ideas, or even from an earnings perspective, second half companies that can perhaps really show the best growth. Which are the top stocks for you at this point?
Yes. So on the pharma side, largely Sun Pharma, Lupin. That's our top picks on the generic side. On the slightly more on the domestic pharma, Ajanta Pharma, Eris Life. These two are the preferred names on the slightly tilted towards the domestic pharma. And on the hospitals, we are very constructive on the space.
Okay. All right. Got that, Param. Thank you very much. Quick conversation today. But thank you for the perspective on some of the key stocks that have been in news from the pharma basket. Well, we'll take a quick break on that note. On the other side, we'll have the technical setup coming up. Shrikant Chauhan and Mitesh Thakkar will join in with today's trading calls. Welcome back. Let's just quickly glance across Asia and maybe we can get the implied open up. The bulls have had to wait all through this week. The all-time highs have been fairly elusive. So, it's a fairly mixed picture across Asia. Don't have too much of clarity. The Japanese market is roaring away. The Nikkei, by the way, is up 1.2% right now, chugging along to the 52,000 mark now. Implied open for us. Let's get that up as well and see how it's doing. The Chinese markets, mainland China, Hong Kong, they're all down. Implied open is doing nothing. It's just 1 point, hardly 1 point up. Okay, so against this backdrop, let's continue to focus on some more stocks and company-specific action. Reliance Industries has tied up with Google to offer free Gemini AI access to Reliance Jio users. Rima is here with more details. Rima, tell us, do all users get it? Is it for a certain category of people? How does it work?
So this is indeed very exciting news for the 500 million plus Jio users, because Reliance Jio has tied up with Google and they will be offering free Gemini AI access to all of Jio users. It starts with a younger cohort, 18 to 25, but you get access to 18 months of Gemini AI, which is otherwise priced at $35,100 or nearly $400 million. And with this, you can create videos, you can create images, and you also get access to Google's 2 TB cloud storage. But there has been this race where global tech companies are now trying to woo India's internet AI users. We have more than 1 billion AI users. So Perplexity tied up with Bharti Airtel. Very recently, OpenAI said that they will be offering their ChatGPT Go, which is a lighter but a paid version, free starting November. So, the question is, why this gold rush to capture India's internet users? For starters, as I said, we are the largest growing digital population. If you give free access now, it builds that habit. It gets you locked into the entire AI ecosystem, and then companies benefit by getting in the data from diverse multilingual market, which can help improve their AI modeling. And if you partner with telcos like a Bharti Airtel or Reliance Jio, you don't have to spend on marketing. But this Google Reliance Jio marketing partnership extends beyond offering Gemini AI, which is of course the big news, but they're also working together to provide Indian companies better access to Google's special AI chip called Tensor Processing Units. That's the second, the second layer of the partnership. And the third one is Reliance Intelligence will be helping Indian businesses use Google's AI agentic platform called Gemini Enterprise. So, as I said, very exciting news for all Jio users.
All right, good news for all the Jio users, but the big movers yesterday, Hormaz joins in with the ones that saw particularly heavy volumes and something that stood out from the delivery data.
Morning, Manglam, and mostly earnings reactions, a lot of them on that. That revenue stack or Ixigo at one point was down almost 20%, still closed around 15-16% lower. And if you take a look at the volumes, it was the biggest single day fall on record, of course. The volumes were the highest in the last 4 months. We had almost 2.5 crore shares that were traded on Ixigo yesterday. The 20-day average is around about 45 to 46 lakh shares. And out of those 2.5 crore shares, 84 lakh shares were marked for delivery. Here, the 20-day average is only 13 lakhs, so almost 7 times the 20-day average delivery volume on Ixigo in yesterday's trading session. The other one that fell yesterday was Shaily Engineering, and in proxy to what happened to Dr. Reddy's yesterday, there's the biggest single day fall in over 3 years now. The volumes were the highest in over a month. They had more than 15 lakh shares that were traded. The 20-day average is close to 3 lakh shares, and out of those 15.5 lakh shares, 5.5 were marked for delivery, and the 20-day average here is less than a lakh. It's only 95,000 shares. And the stock is at a very key support level of 2283, which is the 50-day moving average. Why is that significant? Is because it has not closed below that level since August. Now, Chennai Petro has had a very good week. It has had 2 days of stock movements of 9% or more. And 3 out of the last 4 trading sessions on Chennai Petro have seen more than 1 crore shares that have been traded on the stock. Even in yesterday's session, we had 1.7 crore shares traded. 20-day average is only 34 lakh. And the delivery volumes are 25 lakh shares mark for delivery. The 20-day average is 7 lakh shares, and it's had a fairly good year as well, has Chennai Petro. It's up 42% on a year-to-date basis. And lastly, Sagility is the 8th day of gains for the stock yesterday. It's up 20% during this period, and the volumes in yesterday's session were the highest since its listing. Incidentally, the stock listed on the 5th of November last year, so it's almost a year to Sagility's listing as well. And 55 crore shares were traded yesterday. The 20-day average is just around 2.5 crore, and out of those 55 crore, 10.5 crore shares were marked for delivery. The 20-day average here just above a crore.
Right. Thanks a lot for that, Horma. So those are a bunch of stocks. A couple of them that stood out from numbers yesterday. Sid Khemka still with us. United Spirits, what a solid set that came in from at least, the premium volume part and also the operational performance. The company reported 41% jump that we saw in their profitability as well. What do you make of this one, Siddharth? And even Pidilite, consistent, solid 10% volume growth for the last many quarters, as many quarters as I can remember.
Yeah, hi. So I think United States, we saw a strong beat across in terms of performance and all-time high margins. So I think the efforts that the management has been taking in terms of growth as well as premiumization, that is playing out well. The mix that is improving, and so now you have the P&A revenue, which is now 90% of revenue mix, and the popular segment which has come down. So that is aiding margins. I think the growth was also supported by re-entry into the Andhra Pradesh and strong performance of innovation launches, and so that is something that they have continuously done. So I think slowly and gradually the efforts are paying off in premiumization, margins are improving, and growth is coming back. So some offset of the Maharashtra adverse policy changes is being taken care of by re-entry into a high growth market like Andhra Pradesh. So overall, I think we remain positive on United Spirits, although valuations are a bit on the higher side, but that has been the case always. So that's the view on United Spirits. Pidilite, I think a steady, consistent volume growth. The consolidated revenue grew by about 10%. Underlying volume growth that was pretty strong at 10%. And it is good to see a company like Pidilite again showing strong performance, a consistent compounder in the past. The again challenge here is that with this kind of growth, net profit growth of 9%, valuations which are still on a 1 year forward about 50-60 times. I think we remain neutral, but nonetheless strong numbers from Pidilite.
Okay, all right. Hi, Sid, I want to ask you about a couple of other numbers. I think Gravita is something that you track, right? The stock actually has come off drastically from the top, but these numbers look pretty okay. And we know the recycling theme has got, a good runway. What's your view on the stock? And if you track Welspun Corp, well, very, very good set of numbers. And we had explained the company earlier. They are one of the beneficiaries of Trump's tariffs, of Mr. Trump talking about drill, baby, drill, and balance sheet as well is looking spectacular. Any view on both these names?
Nigel, we don't track Welspun Corp, so unfortunately we will not be able to comment there. But Gravita, yes, definitely we do have a view, and as you rightly said, there is a lot of focus on recycling. A lot of new names have got listed in this space, and they have done well. So even if you look at Gravita, the numbers reported, the operating performance was above our estimate. Revenue grew about 12%. Margins saw a marginal uptake, and we have seen the net profit growing by 33%. Even in, if you look at on a segmental basis, the lead business that grew about 11%, there was a 5% volume growth. Aluminium business saw a sharp improvement of 37%. Volume grew 27%. So overall, we continue to like Gravita. We believe that the company has the capacity that is getting expanded, and this focus on value-added products, plus the improved domestic scrap availability, that because of the regulatory support, that should lead to a good 25-30% CAGR in earnings over the next 2 years, and hence we continue to remain positive. We have a buy rating and a target price of 2,000 on Gravita.
All right, just finally before we let you go, Latravenues Tech, Ixigo, was at one point down nearly 18-19% yesterday. The results that came in, there was a reported EBITDA loss, but if you adjust for the non-cash ESOP expense, there was a 28% jump in the EBITDA, and the cash profits, or rather, the operating cash flow, also jumped by a good 30%. What do you make of these numbers? And the second half, the travel theme, the OTAs, etc. What do you make of this stock? And is there anything else that you like here?
Mangalam, we don't track Indigo, unfortunately, but the entire travel tourism theme that has done pretty well in the last couple of years post-pandemic. I think the domestic tourism has picked up nicely. So we are mostly tracking the hotel space, and there we like Indian Hotels, Lemon Tree. Those are the two preferred picks there. And the third idea that is a quasi-play is Indigo, Interglobe Aviation. Again, consistent capacity expansion, newer cities being connected in India, and also the future growth for Indigo is coming from the international destinations. So overall, I think hotels and aviation, these are the two preferred picks from us on the travel and tourism side.
All right, Interglobe Aviation, Lemon Tree and Indian Hotels. Thanks a lot for that. That's all for today. Have a good Friday and a good weekend. We speak to you next week as well. Sid, thank you. Take a short break, come back, we'll have the pre-opening rates, and also we have Abneesh Roy of Nuvama Institutional Equities to talk about so many earnings from the consumer space that came in yesterday.
Welcome back. 15 minutes to go before the session kicks off, and the implied open has given us zero indication of the direction because there's nothing really moving. If you look at the GIFT Nifty and the way the implied open was, which is hardly 1-2 points near the flat line, now it's 4 points down. So that's, as clear as it gets, perhaps. Mitesh Thakkar is with us. Let's get his thoughts in on Friday trade. Mitesh, good morning and happy Friday to you. Index, it's just testing everyone's patience, right? But tell us if there's a trade, Nifty, Bank Nifty, anything?
Yeah, good morning, Sylvie. So I think, the index actually, if you look at the movement, the way it's moved from 24,400 to about 26,100, we already had a good rally. I think we're still trying to digest the gains. We're seeing the moving averages on daily and weekly charts trying to catch up with price. So I think some of this consolidation might last for a few more days, but broadly, closing about 26,200, 220 zones should suggest fresh breakout, and then we can see continuation on the upside. Till then, I think you will have some choppy days, and on the downside, I maintain 25,800 as the first level, and in a bad case scenario, 25,600.
Nifty Bank this week has managed to put on about 0.6%. Nifty is absolutely flat for the week. Any trades there on Nifty Bank, if at all? Otherwise, stocks, tell us about today's stocks as well.
I'll just cover the Nifty Bank as well. I think twice you've seen the Nifty Bank head towards 58,500, failing to close above it on hourly and 2-hourly chart. So I think that's the immediate pivot because it's at all-time highs. There's no historical level. So this is the current level, 58,500. And on the downside, the first support is around 57,700 and then 57,350. So I think these are the levels I'm watching at. Try to buy near the support levels, and if we get past 58,500, that will be a fresh breakout for the Bank Nifty. On the stock side, I have 3 buys to a sell. A buy on NBCC with a stop at about 115.9 or just below 116, and a target of 124 is what I recommend. DV's managed to get above the previous highs, so buy here with a stop below 6,600 for targets of 6,790. Also a buy on Hoodco. Good continuation signals over here, so keep a stop below 234.5. Look for a target of 250, and one sell call, that's Indigo. After a long time, some negative candlestick pattern, averages are slightly on the negative side. So sell with a stop just above 57.85 for targets of around 5,600.
All right, we take that point. We also have Chandan Taparia with us. Chandan, your call on the indices and individual stocks.
Good morning, Mangalam. Thanks for having me. So market witnessed some profit booking from higher levels, but the good part is index is absorbing supply near 26,000 marks. We have noticed that index has been moving in between 25,800 to 26,100 zone from last 8-9 days. And I believe small follow-up is required to commence the next leg of rally. However, data setup are getting mixed cues, but I believe buy on decline could continue as major trend of the market is positive. So I'll focus on key support near 25,800 to look for an upside momentum in the market. Looking at the Bank Nifty index, that also witnessed some profit booking from higher levels, but 57,500 is major support. Till it holds above 57,500, we'll go with buy on decline stance for an upside target towards lifetime high of 58,577. But yes, looking for some consolidation in a broader market where selective sector and stocks will do better than the indices. Now, talking about stock specific ideas, first that is buy on Hoodco. We are positive on the selective selective name which are doing well and given a consolidation breakout on the daily and the weekly chart. And Hoodco is one of the strongest name in that category. Technically, it has given a breakout from a symmetrical triangle pattern, surpasses falling supply trend line. It has seen the buildup of long positions and momentum is clearly visible from last 2 trading sessions. In fact, Nifty CPSE index is doing well and Hoodco has potential to move on higher side. So one can buy with support of 234 for an upside target towards 257 kind of level. Second trading idea, that is buy on NBCC. In fact, it has seen a positive price pattern. In fact, consolidation breakout of last almost 15-20 weeks. It has given a decisive hold above 114. So one can buy with support of 114 for an upside target towards 126 kind of level. And one more trading idea, that is buy on Canara Bank. Positive view on most of the PSU name. And I believe PSU could do well, whether we talk about Canara Bank or SBI and all other names. So Canara Bank can do well. In fact, we have seen positive momentum with surge in trading activities and volume. So one can buy Canara Bank with support of almost 129 for an upside target towards 141 kind of level.
Right, we take that point. Chandan, thanks a lot for that. Meanwhile, let's talk about the big IPO that opens today. Lenskart's near 7,300 crore rupee IPO opens for subscription today. It's open today up until November 4th. The price band 382 to 402. The issue size nearly 78 crores, of which fresh is 2150, and the OFS by promoters and investors is close to 5,100 crores as well. What the company is seeking for what it is giving you is a market cap of nearly 69,241 crores. And at the same time, the promoter stake comes down from closer to 20% to closer to 18%. The anchor book is something to go by. There has been strong demand by the institutional anchors. 3268 crores raised by nearly 150 investors, 35% of that having gone to 21 domestic mutual funds, which include the likes of SBI, MF, HDFC, ICICI Pru, among others. And the global participants, we have the likes of Government of Singapore, Norway Pension Fund, New World, Fidelity, T-Rove, etc. What is it that the company is raising money for? 273 crores goes towards setting up their new company-owned, company-operated stores. 591 crore rupees for expenditure around lease, license and rent agreements. And investment in technology is about 213 crores. It's a D2C company that designs and sells a wide range of eyewear products. You would have known about it because of the near 2,150 stores that they have in every nook and cranny of the country, and 40% of their revenue that comes in from outside of India as well. If you look at their financials, last year they did revenues of 6,650 crores, of which nearly 40% came in from overseas markets, Southeast Asian markets, margins of really 15% and a net profit of 300 crores. The first quarter of this year, the revenue was 1,900 crores, EBITDA margins of almost 18% and a profit of 61 crores. A strong business, which is 2.5 times bigger than its nearest competitor in India. And at the same time, we have seen a fairly widespread and wide recognized brand and a good back-end integration as well. But all of that at what price? 10.5 times FY25 price to sales, 234 times FY25 price to earnings. So this is exactly the question that I asked the management, and this is what they had to say. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes, and the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal.
Okay, so that's the management's justification to that very pointed question that Mangalam asked, saying, what about the asking price? Is it fair? Does it leave anything on the table or not? We'll keep discussing this through the course of the day. And in a bit, we'll discuss FMCG earnings as well. Before that, I just want to highlight two stocks because we have some very sharp result reactions worth pointing out. Navin Fluorine, 11% higher. Navin Fluorine's margins same period last year were 20%. Now that margin has come up to 32%. The company is saying that they will probably sustain margins at these levels. They're expecting a very strong second half. The market loves that commentary. So keep this stock on the radar. On the exact flip side is Bandhan Bank. When the pre-open session opened, it started 10% lower. Now it's kind of cutting those losses to an extent. Still down 4%. But it's been a really disappointing quarter. A major crunch on margins, about 60 basis points lower. Their net interest income is down 12%. Their asset quality has deteriorated. So just keep these two stocks on your radar among, of course, the slew of earnings reactions that we'll have today. Mangalam, but we've had a bunch of FMCG names as well, Dabur, ITC, all of them reporting overnight.
A lot of numbers that came in. In fact, post-markets, we had ITC, Dabur, Pidilite and United Spirits among the others, along with a lot of the companies that Abneesh tracks. But these are the major ones. Abneesh, what do you make of these numbers quickly? If you could tell us, one line on each. ITC, 6% volume growth, fairly steady. Pidilite, consistent double-digit volume growth. Strong margin outperformance from United Spirits, and Dabur, fairly in line.
Yeah, hi, good morning. So out of those four results, we'll be most positive on United Spirits. We expect United Spirits stock to do well in the near term, medium term because of four reasons. Clearly, Karnataka and Andhra are making up for the Maharashtra decline. Maharashtra, there is a double-digit decline, but stock is already factoring in. And we expect second strong year for Andhra market for United Spirits. Gross margin, EBITDA margin, both were multi-quarter high for United Spirits. And next 1 year, on the raw material side, both glass and ENA look under control. There is the UK FTA kicking in the FY27, so that will also benefit. And if any value unlock happens in IPL at some stage, that's a further option value. The new MD clearly is far more focused on ground. On rest of the three results, as you rightly said, mostly in line. So Pidilite, great compounding story, but not much valuation comfort. But Sudhanshu was delivering again second quarter in a row, good margins, good volume growth, double digit. So that's quite good. Dabur and ITC, I will say more of a Q4 recovery story. ITC, I would expect margin recovery in cigarette business in Q4 because leaf tobacco prices have come off. In December, what happens to the taxation in cigarette? That is very important. As of now, 6% volume growth is a good number. My sense is ITC is taking corrective action against Marlboro. And that's why if you see, it's a good number for such a 75% market share. Dabur and HUL, same issue. In October month also, GST transition impact is there. So I would again say Dabur is a Q4 story. HUL is also a Q4 story. So we'll prefer United Spirits at this juncture, and we expect strong recovery and strong all-time high in the stock in the next 1 year for United Spirits.
All right, all-time high the next 1 year for United Spirits. Abneesh, just out of curiosity, which analyst in your team will be tracking Lenskart once it lists? Because the company calls itself a tech company and the business is retail. So I'm just trying to figure out.
We will discuss that. Titan, if you see Titan Eye, obviously is part of retail and that's also a bit similar, but we'll discuss that and we'll come back.
All right, we'll discuss that and come back. Would you basis, what is happening in Lenskart? Have you ascribed any sort of valuation to Titan's eyewear business? Or once you look at that, the valuation that they get, and then you look at comparing them and perhaps add it to your SOTP at some point?
No, I think for Titan, jewelry business is still the big daddy, and versus Lenskart in that part of the business, clearly Lenskart is far bigger, far more nimble, and much more innovative, I'll say. And that always happens, right? In Titan, kind of a large company, jewelry and watch will get a higher priority. So I will say, yes, jewelry now, good thing is because of the price coming off in gold, we are going to see grammage growth gradually come back. So I will say, yes, Lenskart maybe add some option value, some uptick. Ultimately, it's all about jewelry business, jewelry margins. We are positive on Titan from medium long term, and we see that definitely volume growth in the gold will come back, jewelry will come back because of the gold prices cooling off. So we are positive from that rather than Lenskart kind of a.
All right, if that happens, that will just be a bonus over and above whatever is happening. Apart from the numbers that came in yesterday, some came in day before yesterday as well. And Radico Khaitan really stood out in terms of their volume growth. Over 24% is what they're guiding for this year. And the premium part's doing a lot better. The stock obviously has seen a run up, but do you think there is room for more? And what do you make of that performance?
So we don't cover Radico. We like the space. Alcobev space, clearly next 1 year, 4 key reasons to celebrate. Of course, because of the GST cuts, the disposable income in the consumer's pocket is higher, and we see discretionary segments in FMCG benefit, and paints and spirits will be the 2 pockets where we see a benefit of that. Of course, biscuits and snacks should also do well. Second, of course, is the UK FTA margins will kick in terms of the FY27. Third is from a ENA and glasses, next 1 year, things are benign. From an Andhra market perspective, I think Radico has also gained a lot of good growth there, and they are one of the leaders there. My sense is Andhra's second year also is looking good. So yes, the entire space is looking good. We we cover United Spirits, and even the other spirits companies are seeing good growth in Karnataka and Andhra. So we remain positive in the space. We have a buy on United Spirits.
Okay, so on a high on Alcobev. Got that, Abneesh. Just wondering, I don't think you track Swiggy, or do you?
No, we have our internet analyst, Nikhil, who tracks Swiggy and that space. So I track from the FMCG and the overall retail perspective.
Okay. All right. Swiggy for another day then. Thank you very much for joining in. Stock's holding up, actually, because as Manglam was explaining to us, all the internal parameters, whether you're looking at their food delivery business, where they're really gaining a lot of market share, actually doing better than Zomato, or you're looking at their quick commerce business, there also, I think, a lot of the internals, including the contribution, the margin at the contribution level, which is still a loss, but the losses are reducing now.
It's in the right direction, but more importantly, everyone's looking at the war chest right now, because after the QIP, they'll have around 17,000 crores, which is pretty much in line with Eternal, and over, $1 billion more than what Zepto is. So what they will do with that war chest is something we will most definitely watch out for in the pre-open, ending slightly higher right now. 2 seconds to go for the market opening. The GIFT Nifty was indicating a flattish start, mild green. Perhaps that's exactly what has happened, a flattish start. This one on the mild red side of things. Let's see what's moving. On the way up, we have BEL, which is among the top Nifty gainers. Eicher Motors is mildly higher. No one big name which is seeing a big gain or a loss. On the way down, Cipla as well. All the losses are curtailed less than 1%. The broader markets is where the action would perhaps be. United Spirits, that definitely is the stock of the morning in the F&O space, up 4%, solid margin performance coming in, so that one's taking the cheers. And on the way down, we have Bandhan Bank and Manappuram Finance. Both these numbers not impressing the street, and Gaurav mentioned that, both those stocks lower as well. Dabur, we didn't speak about those numbers, they were largely in line. There was a mild miss on volumes at 2% versus street expectations of 4 to 6%, and they've launched a Dabur Ventures fund, in which they'll invest 500 crore rupees to invest in some of the new age companies. That's, seeing some bit of profit taking. And a big move is what we're seeing on something like a Naveen Fluorine after good results as well.
Yeah, Naveen Fluorine's been a real rock star with the kind of improvement they've showcased in Q2. And the market perhaps believes that finally the worst, finally it's over for some of these chemical companies. By the way, NTPC is reacting quite negatively to its numbers. It's down to 2.5%, making it the worst performing stock on the Nifty. Cipla is still reeling under some stress, so 1.5% lower. Remember, it's not just Mr. Vora's exit from the company. Cipla also lowered its guidance on the US business. They'll not be meeting their earlier benchmark. Slightly more slower rate of growth this year. That's what they're saying. So that stock's down. Max Healthcare, Apollo Hospitals, actually, the entire space is under a little bit of stress today. Some of the metal stocks are also losing ground. Tata Steel, Hindalco, some of these stocks on the lower side. The banks are not exactly fired up. SBI, Kotak Mahindra Bank, all fairly sluggish this morning. On the upside, there's just ITC, BEL and Eicher Motors. But really, all the action is in the broader markets and in the result reactions. United Spirits, the stock that Abanish was just talking about being one of their top picks, is up 4.5%. And by the way, TD Power reported numbers. TD Power's numbers also good. Stocks up 9%, Nigel.
Well, that's right. TD Power is one of the stocks actually I was, it's spotted with regard to a good earnings reaction. Motilal Oswal is a little bit weakish. That stock has opened up with some pain. Welspun Corp is up 1.5%. The metals pack is down, but this one seems to be outperforming. Growth is good out there. EBITDA number at record levels on this one. Order book as well as at record levels. And everyone's fretting with regard to Trump's tariffs. This is the potential beneficiary because it's located in the United States itself. So big move is what we're seeing, on that one as well. Volumes as well fairly high. Finutex Chemicals, I think it goes X the bonus, I think, today. So that stock, in fact, has become a 28 rupees stock, become more liquid. Stock is up more than 15%. Finutex Chemicals, it was a 250 rupee stock. I think post this corporate action, that one's in fact up. And IFB Industries, another stock that's been reporting a lot of weak results. Now it seems some of that good work with regard to margin focus, that's playing out. And that's why that's up close to 2.5%.
There's two stocks, Nigel, I wanted to point out before we move forward. One is V2 Retail. The QIP opens today. So that stock's up around 4%. So that's a positive move out there. Fundraising for V2 Retail. They've been growing well. The management had told us that they are targeting 50% revenue growth in this year and the year after that as well. And the second one, Gillette. 3.5% revenue growth. The street would say there is no great shakes about that. But remember, it's a 9% EBITDA growth, a good growth coming in the bottom line as well. And this was the most disrupted because of GST. Because GST on shaving foam, shaving cream, shaving razors, etc., all of that was reduced from 18% to 5%. So they would have had a lot of transition impact. And now the second half looks a lot better for them because now all these products are a lot cheaper. And here is that shift from unorganized to organized. And they are increasing their TAM, going beyond TAM, total addressable market, going beyond just men and into women products as well with Venus. So Gillette, the street likes those numbers or likes the story more than just the numbers. The numbers not particularly a problem this time around.
Absolutely. I just want to point out that look at Swiggy. From the opening level of about a 3% rise, now it's about 2%. So we'll see how the market digests the fundraising, along with obviously what has been a good operational quarter. Tradeep Bhattacharya, CIO Equities at Edelweiss AMC is with us. Tradeep, it's all about new age businesses and all businesses with a tech hat. These days, every business comes with a tech hat, right? You guys have an IPO fund at Edelweiss. So tell us how you think about it. I don't know if you directly look at it or, you oversee it in your role in any case. But now when you have an entity like Lenskart coming to the market for, the manager who's running an IPO fund, what do you do when the asking rate is 200 times forward earnings? Does this make the cut for you? And when we're still debating this, that it's a retail company, it's retailing eyewear, but at the same time, it talks about being very, very tech focused. So lines get a little blurry here. Your thoughts?
So good morning. Thanks for having me on your show. And I would say that at the moment, we are obviously flooded with IPOs with regards to the names, some good, some very good, and some not so good. And I think given that I can't talk about stock specifics, 2 or 3 important points in the framework with which we analyze IPOs are worth noting. First of all, new age, old age, the fundamental tenet of business is to make money. As long as it's a profitable business, the unit economics are positive, or there's a direction to profitability, we take a serious look at it. That's the first part. The second part is, of course, the valuations, and we kind of we look at what is the competitive landscape, how many businesses are listed in that space, and then take a view on that. So a combination of all of these leads us to to participate in IPOs, some in a bigger fashion, some in others. Can't comment in specifics, but we do have a fair slew of new age.
No, I get it, Tradeep. But okay, in a more general sense, do you see some froth building up at a broader level in the IPO market now? And when you talk about this particular fund, in how many cases do you actually subscribe to the IPO? Because you also participate in recently listed companies, right? So I'm just trying to understand as a mix, how much is it, how much of the investment is going into actual IPOs at the time of, when they're open for subscription, and how much later, and whether you see froth in the IPO space right now?
Well, I think in the smaller market cap segment, in the SME segment, we certainly do see valuation asks being on the higher side. 80% of the fund is invested in IPOs which have listed in the last 1 year. So post the participation in the IPO, we do participate in the secondary market as well. But by mandate, we keep rotating at the end of 1 year or particularly after 2 years so that we keep to the theme of the fund overall. But regarding froth, I think in the mid and in some of the mid and small cap related, particularly in the SME area, we do see a bit of valuation excesses being coming through, but they usually tend to get washed out over a period of 3 to 6 months after 1 or 2 quarterly numbers come through. So we are not fussed about that.
All right. Hi, Trideep. Good morning. Good to see you, Ben. I recall you were underweight tech and you'll close that call, I think a quarter or two ago. And you were saying that maybe, in fact, it's forming that basing out or bottoming out process. The bad news sometimes does continue, but the stocks have stopped falling the manner they were and they've underperformed. What's your view on tech right now?
So actually, you would be surprised to know that overall in the last quarter numbers, tech as a sector has seen earnings upgrades, has seen the earnings upgrades of about 1 or 2%, which is the first time that we have seen in good last 4 to 6 quarters coming through. Given where expectations were, that was seen positively by the street, which is why we have seen off late, if you look at during this result season, a good amount of rally come through in the case of tech. Still, the longer term underperformance stays, but I think true to what I said earlier, I still retain my view that the earnings are in the process of basing out. If we do have a trade deal with the United States, which is quite likely over the next 1 or 2 months, then the sentiment towards the sector gets a little better. And come calendar year 26, if the allocation towards IT tends to be better, then I think there is a good case of earnings bottoming out. We recently saw Cognizant report numbers, and generally the numbers that seem to have coming through are saying that demand is clearly not getting worse, and in pockets there are some improvements coming through. So if you take a 12 to 15 month view, I retain overall the view that tech as a contra play might just about come in vogue.
All right, tech as a contra play might just do well for you. As we speak, the Nifty has moved mildly into the green, and this one has been led by all the auto stocks. So pull up, the intraday of Maruti Suzuki reports its numbers today. That stock's doing well. We have Hero MotoCorp, which has seen a bit of a spike from the lows, currently at the higher end of the range so far. Eicher Motors too has picked some steam, and we are seeing some extended purchase in discretionary names. So Titan, Abneesh spoke about that as well. Jewelry stocks looking better because of a mild correction in gold prices, so that bodes well for their demand. Titan's moved to the high point of trade, and the additional kicker that may come in, perhaps looking at the valuations of the IPO that has come by just today. The other one that is extending its gains is United Spirits, up 6% right now. Remember, the conference call is at 4 p.m. today after the market shuts. Streets building onto those gains. In fact, going into numbers, the stock was fairly strong as well. So the deep on a consumer discretionary name and the auto names, how do you feel?
I think first, the welcome change this earnings season in general has been that so far we have seen earnings upgrades come through. This is the first time in the last 1.5 years that we have seen a bit of earnings stability stroke upgrade of about 1 to 2% on net balance across Nifty 50 names coming through, which is why you see the markets where they are. How much they sustain is another question, but that's one part that certainly I would like to highlight. In that context, one of our key areas of overweight has been consumer discretionary. And within this, particularly autos have seen meaningful amount of earnings upgrade come through. And we continue to remain positive on this, particularly heading into the near-term December quarter numbers. So if you add on top of this that there is the overall pay revision will come sometime next year, I think the catalysts are lining up quite well for consumer discretionary as a sector, doing well. And I think we are quite nicely positioned there, and could see further upgrades from where we are.
All right, Trideep, we have the festivities that have begun, and normally you see this October, November and December, play out pretty well. But these companies are reporting very good numbers, particularly, the harder liquor. United Spirits, the stock is on fire today. Radhiko Kaida and Mangalam was telling us the numbers look quite good. And you have the newly listed companies as well, like an Allied Blenders case in point. They've done some backward integration. They're focusing now on premium sales. That stock's heading fresh 52-week highs. And the other one is Tilaknagar. That's going to be a whiskey player from a brandy player. What do you make of this pack? You know, there's an argument for a long time that as India's per capita moves up, the penetration is less. Your view on this space, the Alcobev?
We have been overweight this space, and I think the point that I would make beyond just near-term discretionary pickup is some of the companies that you name have had brands which have not only done well in India but also overseas. So these are examples of Indian brands which have not which have been a few, but could be more, which have done or which can go globally and still see a good demand coming through from consumers. One of the companies that you mentioned, beaten earnings by close to about 12 to 15%, predominantly driven by the pickup that they have seen in overseas consumption as well, which was very pleased to see. So net, early signs of some global brands coming through, even though it's in the field of liquor, and hence the stocks have done well.
Take that point. So you're overweight on liquor, and where do you stand on the beer front?
I think it will be too specific to comment on that, but I think our focus...
Nice try, Mangalam. No, the boys are trying, right? Okay, Trudip, very quickly, as we wrap this up, since we're talking about discretionary consumption, I just want to get your thoughts on how you are rating these platform companies, Swiggy. And I'm not getting to specific stocks, but I'm saying otherwise, if a company that came to the market 1 year back, came back in less than 1 year, and said, I'm going to dilute equity because I need more money, the market would really frown. But then these are very different businesses, and they're, raising a lot of cash. They're throwing a lot of cash. There's a war out there. So, and by the way, Swiggy in the last 1 year has not made money for its investors. It is where the stock listed around 420 thereabouts. So is this a long haul game of patience when you're talking about consumer tech and these food delivery and quick commerce companies? Or do you think that this is not something that you are too gung-ho on at this point?
I think overall we have taken notice of the fact that over the last 6 to 12 months, competition in this space came down for a brief while, and these stocks did well. And now competition is again coming back to the fore, and which is why they have to invest and hence raise money. I am, in absolute terms, not a big fan of such such instances. I think companies should have their own cash flows to kind of withstand competition. Overall is the framework that we kind of tend to see. At the moment, though, particularly in the not in the food delivery, but more in the quick commerce side, we see the market TAM quite big. So I don't think the market will lose patience on this anytime quickly. But this bouts of competition needs to be navigated through in such a way that the companies need to stay solvent, so that on the other side. So I think a careful view is the way I would put it. We are not certainly overweight in this space. We have our representation in there, and we are mindful that this could be cash guzzling businesses if not run carefully.
Okay, all right. So caution and care, perhaps warranted. Take that point. Thank you very much, Trudip, for joining in. Good conversation, and you have a good day and a good weekend as well. All right, quick glance back at the screen. Let's see how things have stabilized. We're up. The dips are getting bought, which is always good in the market. You saw the opening slight decline come through, but now we seem to be coasting along, and some of the auto names are finding takers. Actually, auto is the best performing sector in the large cap space. Eicher Motors, Maruti, even Bajaj Auto for that matter, Tata Motors, all the auto stocks are revved up this morning. So looking good. Okay, let's continue with corporate conversations as we keep dissecting more earnings. Indegene is the next company on our radar. The revenue came in line with the estimates, but there was a miss on the operational front. We have with us Suhas Prabhu, Chief Financial Officer at Indegene. Thank you very much for joining in, Mr. Prabhu. Good to have you in. So your top line growth, I think, was as much as 17%. However, margins from about 18.5%, you've come down to 16.5%. Why was this 200 basis points compression at the EBITDA margin level? What were the factors at play? And is it a one-quarter phenomenon? And can you give us some visibility on H2?
Sure. Thanks, Surabhi. So, as you rightly observed, 17.1% growth in the revenue. Coming to the margins itself, we had a couple of transactions that closed in October from an M&A perspective, and we had certain non-recurring, non-operational costs in relation to the transactions that we closed, such as diligence and legal fees, which has impacted the margins for Q2. But given that these are non-recurring, we expect that to get back going forward.
So for the year, what kind of numbers should we work with regard to revenue growth as well as margins?
The revenue growth for H1 has been a healthy 14.8%. We remain bullish given the kind of pipeline conversion as well as growth in a pipeline that we see, and are hopeful of beating our last year's growth rate as we look forward to ending this fiscal year. On the margin front, given that there would be a negative impact of the M&A kind of expenses, though non-recurring in nature, on a full year basis, this might result in a slightly lower growth on the margin front compared to the growth rate on the revenue front.
So can you give us, some indication, even a rough band would do? I mean, will you end the year also around the current 60-odd%, or will it be a little better than that?
At the EBITDA level, I would say we should be a little under 20%. And last year we did around 19.6%. We might be a little lower than that.
All right, we hear you. But what about the deal wins? The first quarter you got a bunch of $3 million average contract values. What have those wins been in the second quarter, and what's your prognosis here?
Yes, very encouraging second quarter. We had 2 deal wins north of $3 million in ACV, and 4 deal wins in the $1 to $3 million range, which is improvement on the large deal wins compared to Q1. The encouraging part was that during Q2, we had our first breakthrough in tech implementation deal with a young pharma company, as well as a pharmacovigilance deal, which is actually a multi-year contract with a med devices company. So these are encouraging signs for us.
All right. I wanted to ask you about a segment which is smaller, less than 10% now, the brand activation. That's degrowing. When does it get back to its growth phase? If you could help us out with that, and also give us a little bit color on the Gen AI initiatives. How are they panning out, and what should we be looking at in the time to come?
Sure. So the brand activation business has seen some headwinds with a couple of projects coming to a close, but we are looking forward to growth coming back in this segment given the pipeline that we are carrying. But more importantly, while the brand activation business, largely coming from an acquisition that we had done in the past, Cult Health, was focused on a brand-by-brand engagement, which sees some bit of natural churn. What we have also done is transformed this capability to be integrated with our enterprise commercial business with a new offering called as Tectonic, where we are seeing the growth. So, one way of looking at it is not just on the standalone, but a rub-on effect on the business as a whole. And that is also the positive that we are carrying from the capabilities that we have in brand activation, having a rub-on effect on the enterprise commercial business of Indigi.
Right. Just to wrap things up on the revenue front, you said that your revenue growth will be a lot higher this year than what it was last year. I just wanted to understand how much higher. Why do I say that? First half, you grew with 14.8%. All of last year, your revenues grew by about 9.9%. So you're obviously much higher at the halfway mark as compared to last year. By the end of this year, what kind of outperformance do you anticipate?
While we refrain from giving any specific guidance, even on an organic basis, we are bullish to be able to get into the range, which is what we are operating at on a year-to-date 6-month basis. And combined with the acquisitions, the inorganic growth rate should go north of 20% for the whole year.
All right. Thanks a lot for joining in. With the acquisitions, the growth rate this year should be north of 20%. We get that enough clarity. With that, take a short break. Come back on the other side. We have the management of Canara Bank waiting by to decode their earnings. Good performance coming in. The stock did well yesterday. Mr. K. Satyanarayana Raju, who joins in to detail those numbers.
Welcome back. Well, the market, was in the red and that dip got bought into, and not just, the Nifty. I think you should pull up the Nifty Bank. We had highlighted this earlier. If the Nifty needs to power ahead, the Nifty Bank is the one that will have to find its form. And again, it's defended the lower levels, so just keep an eye out on that index. Let's move on to Canara Bank. Reported a solid set of numbers across all parameters. Net interest margins a little below guidance. We have with us Mr. K. Satyanarayana Raju, the Managing Director and CEO at Canara Bank, who joins us. Hi, sir. Good to have you on the show. Well, let's get a couple of basic details out of the way. Your loan growth actually is ahead of what you were forecasting. Earlier, you were indicating that low teens is something that you'll be looking at. What is the loan growth trajectory we should be working with on a steady state basis? Point number one. And as I always ask you, how is the gold portfolio doing in this loan book? And how much of it is the retail gold loan book? Please go ahead.
Actually, always consistently last 3 years, whatever the guidance we are giving for that investor community, we are surpassing it with quite comfortable margin in the credit growth. If you see the last 2 years also the same. The current year also we are given a guidance of 11%, and we are able to show almost 13.5% in the year on year by the end of the September. This is not because that we have targeted for 1 quarter or 2 quarters. Last 2.5 years we have a strategy that we are working on that. As per that strategy, that we have to focus more on the RAM sector, so that we should reach that RAM sector at 60% of the RAM sector and corporate sector at 40%. 2.5 years back, our RAM sector was at 54%. Now we have reached to the 58%. So the initiatives what we have taken on revisiting the processes, revisiting the products, any bottlenecks are there, what we addressed those things, centralization of processing, using of the technology, all these things are helping us in growing continuously, steadily. That resultant is almost our RAM sector is growing at 17%, and our corporate is growing at 10%. Because the corporate, there is an opportunity for growing much bigger than that, but we don't want to be part of that interest rate war. That's why we are selectively going for that. Even then, we could show that the 10% growth. Current year, definitely we expect that this performance will continue in the next 2 quarters. And the second and the third and fourth quarters together, finally annual, whatever it is, the credit growth will be ending at 13% approximately. That 13 and around 13% credit growth will be there. Okay. Among these advances, okay, the gold loan portfolio is also continuously growing around 20-22%. Presently, as on date, our gold loan portfolio is 2,11,000 crores. So that's contributing within the gold loan. Our retail gold loan portfolio is around 62,000 crores.
Right.
Just one word, sir, with regard to this retail gold portion, it's been moving very, very steadily. In our last few interactions, it was around 50,000, moved to around 55,000, now it's around 62,000 crores. How do you see this number scaling up? Because gold loan growth clearly has been looking very, very good.
No, definitely, sir. This is actually when we have come out with the metropolitan and urban centers, because there the agriculture availability may not be there, but many people requires that gold loans. The gold loan growth in our bank is better than all other institutes. The reason behind is Whenever somebody comes for the loan against gold, it is on emergencies. So you have to saturate your systems, infrastructure and all that the emergency has met within the 15 to 20 minutes. Then automatically the gold loan people want, they will, and walk in, they will come to the banks. That systems we could establish very well. That is the reason actually the people who are in emergency needs, especially in the South India, of course, nowadays we are finding the traction across the country. They prefer to come to the first Canara Bank. That's the infrastructure what we created is helping us, and it will continue to grow at the same level in the retail also.
I want to ask you a very basic question. You've had a fantastic quarter, right, on all parameters, stable asset quality, NIM compression is just 5 basis points year on year. You know, what we're trying to understand is that why are you not being more aggressive by hiking your ROA guidance? That's still at about 1 or 1.1%, right? You're tracking above your guidance already. Plus, if there are no further rate cuts, there's an anticipation that NIMs can, I mean, the worst of the NIMs is behind us. So why not hike the guidance?
The guidance can be improved, madam, but NIMs at this moment, what we are given the 2.75 is, we are working hard on that. Of course, now currently, I think if there is no further rate cut, then we are stabilized at bottom level. We have reached to that bottom level, and we can see that further improvement in the coming quarters. But if there is again one more rate cut is there, then it will have its own impact on that NIMs immediate for that quarters. But what we are doing that, so we can do that return on asset is increasing that. The reason is still our PCR is compared to other peer banks, so there is a scope to improve. We are at 93.59%. That can be improved to 96-97%. At the same time, we are also providing additional provisions to have a cushion for that upcoming credit loss provisioning, expected credit loss provisioning. That standard assets provisioning buffer we are creating quarter on quarter. That's what actually we are preparing for the future. We have enough cushions. Even this quarter, we have provided 380 crores additionally to create that provisional buffer against the standard assets.
Really prudent, and that's very heartening to hear, right? That you're sort of, while the growth is good, you are still looking at hiking up your buffers, the PCR, and then the expected credit loss rollout as well. That explains, why the ROA guidance for now you're not increasing. Just very quickly, you mentioned corporate growth at 10%. That's interesting. Which segments do you see it sustaining, improving? Everyone's waiting for this corporate growth to really pick up.
No, 10% is not a tough task for us, because just 3 days back, what the latest board committee, we have cleared almost 26,000 crores worth of proposals. There are proposals. Only thing, we are not parting that the interest rate war. That's why we are selectively going that. We are getting the traction, so infrastructure is there, green energy is there, infrastructure related industries are there, data center creation, so much traction is there, real estate is there. And green energy related manufacturing like panels or cells or lithium batteries, these are also is actively participating in that. That's why I have not seen any concern for the 10% growth in the corporate. We have in pipeline, we have more than 50,000 crores sanctioned limits are there.
We take that point. Thanks a lot, sir, for joining in and giving us all those details, parameters, the outlook. You have been doing extremely well. You've been giving decent guidance and going ahead and beating that guidance as well. And when times are good, you are increasing your safety precautions. That's exactly what a bank does. And that's what the street has been doing as well. Post your numbers. There was an up move. And after your commentary as well, continues to be that up move that we're seeing on the stock. In fact, as you can see on the screen, there is also this Money Control stock score just above the line graph. And this is a score which is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, which include both the current and historical financial statements, price charts, and technical indicators. For each of these stocks, we give an individual parameter. For the calculation of 4 factors, they're assigned a score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is not a buy or a sell recommendation, and any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. All right, let's continue our conversation around numbers. The one that reported yesterday was Swiggy, a decent set of second quarter numbers. The net loss widened as expected because of quick commerce investments, but the internals on food delivery, GOV growth, as well as, where the quick commerce average order value and contribution losses declining is going ahead have been tracking well. But more importantly, the companies also said that they will have a board meet to consider fundraise worth nearly 10,000 crore rupees via QIP or other routes as well. Rahul Bothra, who's the Chief Financial Officer at Swiggy, joins us now. Thanks a lot, Rahul, for joining in. Congratulations on a decent set of numbers coming in. But beyond the numbers, most importantly, I remember, when we were speaking before the IPO, during the IPO, after the IPO as well, you said that we have enough cash on our books. We do not need to tap the markets once again, at least in the foreseeable future. And less than a year, you have, money to be raised from the markets. 10,000 crores is what you're looking at. And this, after having sold stake in Rapido for 2,400 crores. So it's not that you don't have cash on your books. Nearly 7,000 crore right now, but you're asking for more. Why dilute equity for another 10,000 crores in almost a year since your IPO?
Good morning, Mangalam. Very good morning to all your viewers. So, as you recall, when we met at the time of IPO, we were in a very exciting quick commerce segment where we were planning almost all the investments. The food delivery business had, of course, turned the corner and started delivering positive, growth and EBITDA. So today, the food delivery business is at a run rate of roughly 1,000 crores on an annual basis, and we are very well, stocked up in overall capital, right? As you rightly said, close to 7,000 crores with the Rapido sale proceeds that are expected to hit this quarter. Having said that, what we have seen in the quick commerce business is that the growth has accelerated. This was the third consecutive quarter of 100% plus growth that we delivered in that business. We've also seen a lot of investments, coming into the sector, both legacy players as well as new players wanting to enter a very, very, high growth segment. So we felt that this is the right time to, stock up what we call the growth capital. We've also been a very innovative company, and we do expect, a few more new services to continue to come out of our stable, as well as, raise a strategic reserve that helps us that we may never have to raise again.
Right.
So Rahul, but give us some more color. Rahul, just give us some more color on this. The 17,000 crores that Mangalam alluded to, which in all probability you'll have once this fundraise goes through. Obviously a large part of it will be organic. You'll keep doing your dark store rollouts. But what else? What else are you thinking when you want to have this war chest of 17,000 crores?
Yeah. So as I mentioned, it's a lot of strategic reserve that we really want to, stock up. We also don't know how long the quick commerce, business will continue to growing at the pace at which it is. We continue to get surprised with the extent of consumer adoption. If you look at just our numbers, we crossed 7,000 crores just in the quick commerce business in the previous quarter. Very strong user additions, doubling our user base over the last year. So we do want to have sufficient, as I said, strategic reserve, and that creates optionalities for us for continuing to invest in the business.
Right. A couple of things. The last time you joined us, you did say that peak of quick commerce investments was behind you. And now you want to build the strategic reserves to go ahead and look at some more investments out here. So there is a bit of dichotomy here. Second part, on the competitive intensity part, how do you see competitive intensity panning out here? Because Zepto has some money. Blinkit has raised some money. They have around 18,000 crore of cash on their books. You will have 17,000 crores. Reported numbers for Zepto would be almost $1 billion. And we haven't even yet spoken about the big guys, the big baskets, the Reliances, and all the others who are eyeing this space. So how do you expect competitive intensity to pan out in the quick commerce space from here on? And what does that then mean for your path to profitability here?
Yeah. So Mangalam, just the announcement of fundraise does not, change our trajectory in terms of the profitable growth that we have alluded to. So we have reiterated our guidance that we will get to contribution margin break-even by the June 2026 quarter. So we have maintained that guidance. Even in the previous quarter, we went down from negative 4.6% to negative 2.6% on CM. It's a pretty sharp move up, backed by some of the key performance indicators like the average order value, which had a whopping 40% increase on a year-on-year basis. So we do believe that the business is on the right trajectory. We have also innovated in launching a lot of new consumer features, especially say Max Saver, which helps consumers to upgrade to larger baskets. We've also added assortment with a close to 40,000 SKU selection available on our platform. So a lot of consumer side metrics have started to show up meaningfully in our growth numbers, and therefore we do believe that the path to profitability is well established in this business. Talking about competition, as you talked about a lot of names, we are seeing some bit of activity. But honestly, I think we are staying true to the problem statement that we are solving for our consumers. We think it's a massive opportunity, and we have all the inputs in place to be able to continue appropriating this more than market leading growth from here on.
All right. Hi, Rahul. Good to speak to you as always. Nigel on this side. Contribution margin break even by when? I just want to clarify which quarter?
June 2026 quarter.
June 2026 quarter. Got it. So the first quarter of FY27. That's out of the way. Since you're moving towards contribution break even, the stock market likes to look at EBITDA. EBITDA break even, EBITDA positive number, and PAT positive number. Very clearly, by which quarter will we see Swiggy becoming profitable, both on EBITDA and profit figures? Please go ahead.
Yeah. So, it's hard to kind of crystal ball, beyond, say, some of the numbers that I talked to you about. We also want to retain the flexibility to continue to invest in marketing to attract new users. As I said, we have more than, we have close to doubled our user base in the quick commerce business over the last year. And we continue to see very healthy traction on a new user addition as well as repeat user performance. So we don't want to kind of box ourselves, as we know that there could be potentially more competition. As of now, it is benign. We don't see very, very high competition in the near term. But going out 3-4 quarters, we really don't know the shape of competition that may emerge.
On the food,
retain the flexibility to keep investing at least in marketing while the CM gets into the positive territory.
So on the food delivery part, now we've spoken enough about quick commerce. There is competition, there is intensity, there is growth. All of that is likely. But the cash cow of your business, which is the food delivery business, it's structurally slowed down. Between 18 to 20% is what now the expectations are. Do you think there is fatigue here? Is there any trigger to structurally take it higher from this 18-20% band versus what it has been doing in the past? And while we're talking about competition in quick commerce, Rapido has come up with the food delivery. Has it made any dent in the market where it's pilot testing right now?
Yeah. So now talking about food delivery growth, I think it's been a pretty healthy growth in both user addition as well as gross order value addition for us. Growing 19% now consecutively for many quarters, and we continue to see pretty good traction there. As mentioned in quick commerce, similarly in food delivery, we have innovated with a lot of new offerings, whether it is the 10-minute version called Bolt or more recently the 99 store, which gets access to affordable meals to consumers. So I think the overall growth can go up, but we as platforms will have to create more opportunities for consumers to participate in what we call the low value meal segments, and that's some of our efforts that we have started to put in. So we are cautiously optimistic to continue to growing at the same pace and hopefully grow faster from here.
Rahul, the good thing about being a very active customer of yours is that you have a day-to-day, visibility on the platform fee, on the search charges, or the rain fee and all of that. Now, what's interesting is that while you managed to hike platform fee, over the last couple of months, off late, there are some promotions which are talking about above a certain, threshold. For instance, the other charges, you're doing away with them. So clearly, there are some of these promotional rationalizations that are also underway simultaneously. My question to you is this level of platform fee that you have, reached, is that sustainable in the face of the competitive intensity?
Sure. So, Surabhi, as you rightly said, the platforms, we have been able to innovate to find the right kind of consumer pricing. You'll be happy to know that over the last couple of years, our consumer fee as a percentage of the basket size has actually not increased. So while there's been an introduction of platform fee, we have also given back value in terms of extending our Swiggy One program, which gives you access to free deliveries, unlimited free deliveries, right? So there is a certain yin yang that we do in our business to be able to give consumers access to the right kind of pricing and affordability so that they continue to increase their frequency on the platform.
But my question, which is great, Rahul, I love it as a customer, but my question really is that in the face of unrelenting competition, and that's not going anywhere, right? And we haven't even sort of touched upon what happens when the bigger guns get into the space with their full might. Again, I repeat that question, that the platform fee and the other charges that and you just answered that, right? That it hasn't gone up as a percentage of the total value, it hasn't gone up. Will there be downside pressure in the coming months as the war rages on for the customer's wallet share?
Yeah, no, so we will keep finding avenues to give back, value. I think, ultimately it's the overall cart value that, we have to bring, to bear. There is also participation from the restaurant industry in being able to give value back to consumers. And we are having a very healthy conversation along with the restaurant industry that how do we continue to increase the size of our business. So I think there could be things that could go up marginally here or there, but overall the focus will be to give a lot more affordable solutions to consumers to help us continue to grow.
You speak about affordability and your conversations with restaurants. As customers, we know what the listed price on the restaurant menu is versus what's there on the Swiggy or the other apps like that, which includes your take rate, is bumped up by a fair amount as well. But be that as it may, contribution margins, food business 2.8%. You are expecting it to go all the way up to 5% in the medium term. Just wanted to know what the timeline is out here. Do you have a target for this? By when do you get to 5%, the glide path? And you evaded my question on competition from Rapido in the markets that they are currently doing, food delivery. And they're doing it by reducing the take rate. So on the back of that, do you think this take rate itself comes down for the industry?
Yeah. No, so specifically on the question of Rapido, I think they are test launched in one city. This is a different proposition to say what currently the food delivery business operates. We have launched a similar offering called Toing in a couple of markets, and as I said, these are pre-PMF bets. Whether it's Rapido or whether us, we will continue to experiment around how do we provide a lot more affordable solutions to consumers. To be able to tap into a higher growth market, but that's a different business segment altogether, a different consumer proposition altogether.
All right, Rahul, it's a good show by Instamart on average order value, but the MTU or the monthly transacting users, well, that's been relatively slow for the last 2 quarters in Instamart. So when do you see this kind of shift from AOV to MTU? Because that's where the bigger growth will come from.
No, I think for us, the focus remains steadfast on continuing to grow it healthily. I think, both these parameters are important. As I mentioned, we have actually doubled our overall user base over the last year. And, it continues to meaningfully go up. At the same time, with the focus on the profitability as well as continuing to give right value to consumers, some of the initiatives like Max Saver, etc., have also consolidated carts, right? So consumers have been able to, consolidate carts and get a certain, meaningful value out of it. So the focus steadfast remains on being able to attract new users to the category, also convert dormant users, as well as continuing to grow at the back of some of the non-grocery selection increase that we have done, which has meaningfully tripled over the last year, right? So from 8% close to 26%, which is a non-grocery selection, which typically comes with high average order values.
And when does food business do 5% contribution margins by?
EBITDA, I think, Mangalam, you mean, because
EBITDA,
we are close to 3% EBITDA. So see, as a business, there's a lot of operating leverage. We are a technology platform. Even in the previous financial year, you saw close to 80 basis points, being added. Even in the current quarter, we saw 60 basis points, adding just on the operating leverage, despite contribution margin, being in a certain range-bound manner. We do expect, a certain contribution margin accretion of roughly 100 basis points, and the rest is going to come through operating leverage. And it's a matter of a few quarters from here for us to be able to get to the steady state.
Okay. Rahul, we come back to the capital question where we started. Now, with this war chest of 17,000 crores, once you do this QIP, you're good for how many quarters? Because one thing that public market shareholders usually question is repeated dilution of equity. So you're covered for how long now?
Yeah. No, as I mentioned, a lot of this is strategic reserve. We currently have sufficient capital even on the balance sheet, almost all the IPO proceeds that we raised plus more. And with the Rapido divestment, close to 7,000 crores of cash. So, it's not, this cash is not what I call deployment cash, and not a lot of this is deployment cash for which we have, full usage today. A lot of this is going to be strategic reserve, which we are going to create optionalities for ourselves going forward.
So no equity dilution, say, for what, at least the next year and a half? Can you give us any visibility on it?
I mean, you never say never, but at least here I feel that it could never, happen, because I think, technology platforms, when the transition happens to profitability, we have seen in the food delivery business from negative, 2,000 crores to 1,000 crore positive. It can happen in, a handful of years. And similarly, in the quick commerce business, we have seen even competition being able to demonstrate that pathway. So we necessarily don't see, us to be able to hit the market again. So it's probably one last opportunity for, institutional investors if we if we do the QIP to enter the stock.
I'm sure they'll give you the elbow room. You are a new age business and you are in a business that's getting disrupted on a daily basis. So I'm sure,
the only change that I noticed from then to now is that, that time he had said I wouldn't need it for the foreseeable future. And from then he said I don't need it for the foreseeable future, but never say never.
Never say never.
Interesting one, Rahul. Thank you so much for joining in and giving us all those details. We obviously look forward to, when you raise the funds and what you do with them and whether you come back again for those funds or not. On a quarter-on-quarter basis, we'll be tracking the performance of your quick commerce business and the margin accretion for your food delivery business as you do along with competition as well. Thank you so much for joining in. Wish you good luck and a good, festive season as we move towards the third quarter. Take a short break. On the other side, we have Siddharth Raimangla of Stockbox Technologies joining in for some trading strategies.
Welcome back. We have Siddharth Raimangla, Senior Analyst at Stockbox Technologies joining in. Siddharth, good to have you in. Of course, we want to discuss today's trades and any ideas that you have. But before we get to that, just wanted to get your sense on this extension that SEBI is giving to change the the weightages and the composition of indices where there are there are underlying derivatives. Right, for I think Bank Nifty, now that extension is, the breathing room is now up to 31st of March next year. But for the Fin Nifty and the BankX, I think the changes have to be implemented. Basically, for the benefit of our viewers, these changes, some of them include that no stock can have more than 20% weightage. The index must have at least 14 stocks. For instance, the Bank Nifty doesn't have 14 stocks right now. So how will this play out and will it impact, trading in the near to medium term?
Definitely, Surabhi, hi, and thanks for having me first of all. See, this is going to be beneficial for the index because the primary reason playing in indexes is not to increase our returns, but to decrease the kind of risk that we are taking. So, the decreasing the allocation and increasing probably the number of stocks in indexes is going to be helpful for most people because we have consistently seen an increase in people's trading in these indices, and it is only going to help the participation of individual traders in this indices, and also it is going to, as I just said, reduce the risk as well.
Okay, all right. So we'll see how this rolls out. Now for today's market, stocks, ideas, or any index trades that you have?
Yeah, sure. So we see, if we talk about Nifty, the kind of the manner in which Nifty has taken support at 25,800, probably from the second half yesterday, it tells us that there is room for an upside. But again, I just discussed it with Mangalam yesterday that for the last few days, for most people, it has been very tricky to take a long position in index because these two levels, 25,800 on the downside and 26,100 on the upside, they've turned out to be very strong levels. So either at this time, we can wait for the index to move out of this range, or the other way is to play in those specific pockets or those specific stocks which are consistently contributing to the index's strength. And in fact, today, both of my stock picks are a part of Nifty because eventually I do think that Nifty will be back about 26,000 in the next 6-7 sessions. But right now, these specific pockets or these specific stock opportunities are showing much better momentum than the index itself. So, though our positional view in index should be bullish, but a better way to play in the index itself is to go through stock-specific opportunities.
Okay. All right. So let's get to those opportunities, stock ideas.
Yeah, definitely. The first one is from the auto space. The name is Eicher Motors. See, the stock has played around this played above and below the 7,000 mark for the past few sessions, but today we have seen a very good breakout above this mark. Will be, in fact, I think the momentum should be extending towards those 7150, 7200 levels. So iShares Motor can be bought right now. The spot is trading around 7055. Our stop loss will be at 7020, and the targets being, the first target is 7120, second target 7150. The second stock is from the IT space. The name is HCL Tech. See, we have consistently seen higher tops, higher bottoms being made in this counter. Today, there's not too much of a move in this stock, but even now the stock is trading around its 3-month highs. So the momentum is very strong. We'll see this. I think this can be one of the outperformers in the IT space. So HCL Tech can also be bought. Right now, the spot is trading around 1551, 1552. The stop loss will be at 1535, and our targets being, the first target 1595, the second target being 1610.
Okay, all right, got that. Thank you very much. We'll take a quick break on that note. On the other side, Lata gets chatting with the management of Bandhan Bank to talk about their 2Q numbers. It's not been a great quarter. We'll find out if they have a better visibility on H2.
We continue with our results analysis. Bandhan Bank reported a steep fall in its net profit by 88% from 100 to 112 crore from 937 crore last year, second quarter. Like many other banks, it has reported a fall in its margins. Only the margin fall is a little steeper here, falling from 6.8% in Q1, that is just last quarter, to 5.8% in Q2. The other worry is that its credit cost, which is the overall cost of making provisions for bad loans, this cost barely fell by 10 basis points to 3.4%. For many banks, especially PSU banks, it has fallen very sharply, both bad loans and the credit cost. Finally, the amount of loans or borrowers who have not paid interest in the first 30 days, what in banking jargon is called SMA 0. That amount has also risen. That's an indication of future bad loans to come. If you don't pay your interest, bang, in the first month. So these are the worries that are clouding the stock. Of course, after a steep fall, the stock has now recovered a bit. But let's get to the management. Partha Pratim Sengupta, Managing Director and CEO at Bandhan Bank, joins us. Mr. Sengupta, good morning and thank you very much for joining us. You may have seen from the investor calls itself the kind of fears that is bedeviling the investor community. So let us start first with the GNPA. GNPA rising a bit was not something the market was prepared for. They were prepared for the already elevated GNPA. Where has it risen and do you see it falling?
So let me tell you that our bank, Bandhan Bank, has two distinct segments. Mm-hmm. One, we are in the microfinance, which we call EEB, and the other where we are now making a growth during the phase of transition. Mm-hmm. So last November, we have started Bandhan 2, where we are aiming towards a transition. And I have clearly indicated at all forums that definitely there will be a dip in the margin. Mm-hmm. But your question is now on the NPA.
Yeah, first NPA. Yeah, you'll come to the margin.
Yes. So the NPA, again, if you look at it, we could actually kept it stagnant at 5%. What was there? I don't know, by 9% and 9.6. You are saying only the EEB book, I suppose. It is not the total bank book. Whatever you're reflecting on the screen is probably the EEB segment.
No. At the moment, we are reflecting the SMA book, but that's okay. I'm asking you about the GNPA.
So let
that
me
5%. What?
GNPA, yeah. So GNPA Q1 was also 5%, and Q2 is also 5%.
Yeah, but it's 5% of a larger book.
I'm just telling. Yeah. So I have again told you that there are two distinct segments.
Okay.
So if you look from the non-EEB book, we are definitely in line with the industry. Mm-hmm. Whether it is retail, whether it is wholesale, whether it is the housing also for that year. So that is not that much elevated. It is more or less in line with the industry. If you take that portion, it will be around 2 to 2.2% around for the GNPA. But the pain that was coming from the EV segment, we expected that probably it would go down within Q1 or maximum in the first month of Q2. That has not happened and not happened in the entire EV industry. So while our performance, again, if you compare with the microfin industry, we are much better, whether it is in the NPA or even in the disbursement and other parameters. But definitely it has impacted the bank as a whole. So the gross slippages has mostly, so if my gross slippages is definitely elevated at almost 1,500 crores during the quarter, which was almost at the same level as Q1, but out of which almost 1,100 crores have been contributed by this segment alone. So this as I have shown on the screen also, I can say that the only green shoots in that, I am finding that SMA1 and SMA2 books are declining.
Yeah.
Particular segment. So which is giving an indication, and also I'm finding an indication that the quality is gradually improving. The second part is that the SMA0, again, I have told you also previously and also to the investors, you see, we have a system which is also, again, a very unique to this bank. In this particular EV segment for that year, we go to the field and collect the amount. Now, during holidays, the demand is generated, which was not earlier there. Let me tell you that it was not earlier there. We have made this correction since February this year, in line with the IRAC circular of RBI. So the demand is generated on holidays, but my people are not there in the field to collect the amount. And during the festive season, my major EV areas, that is Bihar, Bengal, Assam, Northeast, and other, the major areas for that, they had a consecutive holidays of 3 to 4 days. So definitely that has that is the reason for actually rising the SMA0 book. But I can tell you that till today, because yesterday also we did a homework and we found that almost 85% of it has already been collected. Okay. And I am pretty sure that the balance amount, or there may be a little bit slippages, but most of the funds will be collected in these 2 days. So holiday impact will always be there whenever there are continuous holidays, especially at the quarter ending. It will impact my SMA0 that we have made very clear to the investors also.
Okay. Well, actually your overall net NPA has also risen a bit. Let me come to the gross NPA, sir. If you, I don't know if you have your own presentation in front of you. I'm looking at page number 17 or slide number 17, where you have the segmental NPA. In the segmental NPA, actually your wholesale banking NPA has gone up from 8.1 billion to 9.1 billion. Likewise, your housing NPA has gone up from 7.3 billion to 8.7 billion. That is what is worrying me. I agree with you that you have reduced your microfinance, what you call EEB book, and the rate of growth of the non-EEB book is very good. I mean, I take all that. But when the GNPA rises, even in wholesale and housing, it scares investors.
Wholesale banking also, we have made a structural change. Earlier, the ACL, which we used to call it as the small enterprises loan, it is similar, nothing but an extended part of the EEB. We have, because we want to make a revamping in the entire structure of this loan, we have actually taken it out from the EEB and put it to the wholesale banking.
Okay, so that's actually MFI, erstwhile MFI.
Let me tell you, without that segment, my wholesale banking NPA today stands at 0.70%, which is less than 1%.
Okay, got that then. That was what was not obviously evident in the slide, and that's must have scared people. Can we go with the confidence that this 5.8 is the lowest margin, and in Q3 you will be able to improve on it? Net interest margin?
First of all, again, I'm telling you, as just now I have said, that we started the transition period. It was very much necessary because we are a universal bank. We are not a microfin bank.
Yes.
So that transition was very much necessary. And during this transition, we expected there will be a dip, and we have indicated the dip also. If you look at our strategy presentation also and presentation to investors at various forums, we have indicated the dip. But yes, the dip that has happened, we also did not expect. The first thing is that the repo rate upfronting, which we did not expect an upfronting on the repo rate. So
that's right.
Whatever has been declared right from day one of quarter two has been passed on to the borrower. This is the first. Number two is that we have also, as our strategy, as our long-term strategy, we found that we are an outlier in the MCLR because my next bank is almost 200 basis points lower in the MCLR. Okay. And so we were just positioning all our loans linked to the repo, where there are opportunities to link to the MCLR. So we did a strategy as a part of strategy. We revamped the MCLR calculation. So that has reduced our MCLR by 200 basis points, and we have passed it to all our home loan borrowers who are linked to that. So that has also affected our rating. Third thing, we have moderated our deposits rate. So savings bank, the moderation has come immediately. Yeah. But the fixed deposits, which were taken, say, up to March, and mostly they were sitting at 1 year deposits. So that moderation is yet to take place. That is expected a part in this quarter, and the major part will be in the Q4, where you will definitely see an improvement in margin. This is the third. The fourth is definitely the slippages from the EV segment is definitely beyond our expectation. Let me again tell you. So we did not expect that these slippages will continue for this quarter also, but it has happened. But the only green shoots, as I have told you, that SMA 1-2 books are decreasing. So that is definitely a good thing happens. Yeah. I can definitely say that going forward, has been a challenging quarter. I must repeat, this has been a challenging quarter. We have seen the least, I would say it is one of the third lowest profit Bandhan Bank has given in the history, but I think we will now only be going upwards.
Okay, now got that, sir. Even your treasury income should not fall. Every bank saw a fall in treasury income because of the fall in bond prices. So all those should work to your advantage. Can you just give me an idea of what kind of a credit growth you are expecting in the second half? There is a lot of noise in the media about very good, customer sales because of GST. So will your loan growth improve? Yes.
So just to give a little bit of statistics. So if you look at my credit growth, we have a Y-to-Y growth of 7%. Okay. There was a dip from the March level, YTD dip in the March level, in the June quarter from the March level. That has also improved. Now we have grown almost Q-on-Q growth of around 5%. So the growth is happening. And if you look at segment-wise, my EB book has degrown by 13% YOY. Yes. My non-EB book has grown by 24% YOY. Yes. So that is a very good green shoot. So I can say, keeping all these things, we will definitely grow by, we are targeting a growth of 11-12% by the year end. And we are hopeful to achieve that. And definitely our deposits growth will be higher than, that was our guidance, that we have not kept in deposit. We said that our deposits growth should be higher than the credit growth, and what we are achieving.
Got that, sir. Got that. All the very best, and let's hope that second half is far better than the first half. Thank you very much for sparing time for us on CNBC-TV18. So that's the word coming in from Bandhan Bank. We wind down on Bazaar with a very, very flat sensex and nifty. Hardly any change. The Nifty Bank is showing a little more pressure, but that could also be because the Nifty Bank composition itself is likely to be changed, and we are going to perhaps likely see lower weightage for the likes of HDFC, ICICI, Kotak, the big weighty ones. So maybe that's putting pressure on the Nifty Bank. Wrap up on Bazaar on that note. Chartbusters coming up.